Welcome viewers, and you're watching the Mortgage Busters show, and yes, that's what we're all about, is helping you bust your mortgage wide open so you can go to the bank and say to the bank manager, Mr, Mrs, whatever, give me the title to my property now because I've paid it off. I've just made my last payment. I'd like to have the title in my safekeeping as soon as possible. And you know what a great feeling that is? It's absolutely tremendous. My name's Greg.
I'm Adrian.
And we're both your hosts for this evening. Now, Adrian, tell me, what's been going on? Have we been getting responses to
Been
our
inundated
shows?
continuously. It's just day and night, 7 days a week.
And
It's
for
going.
what?
Thumbprint reports.
That's right.
Thumbprint. Everybody wants
thumbprint
to
report.
get their thumbprint report, but they're really great. You know, people are putting in detail information of what they need and what they're looking for. It's, making our lives easier and also helping them get somewhere, you know.
Now, if you've been watching the show, surely you're aware of our thumbprint report. We'll talk to you about that as we progress through the show. But our first guest for this evening is one named Debbie Kennedy from the Mortgage Forum.
Not the Mortgage Busters Forum.
No, the Mortgage Forum. Welcome to the show.
Hi, Greg. Hi,
Thank you.
Adrian. How are
There you
you?
go.
This is your concept, the Mortgage Forum.
Yes, yes.
And why the Mortgage Forum? I love the name. It sounds spectacular, but there must be some method behind it.
Well, the
or
reason
some
for
reasoning behind it.
Yes, the reason for the Mortgage Forum is that we like to meet and discuss with our clients. So it's about getting together, having a discussion about their personal needs around setting up a right mortgage for them, whether it be refinancing, a new purchase. We like to catch up with our clients and discuss in detail about what's right for them.
I like that. I like it. I like the forum concept because quite often you hear from people that, you know, that when they go through the process of having dealt with a broker or a whatever professional, they just haven't understood why they've had to do what they were told to do as such.
It's very interesting that you say that because quite often I'll go and meet with a client who wants to refinance or has sold an existing property and upsizing, and when I ask them why they have the product they have, they say because it was given to me.
Yeah.
So as long as they got their loan, they were happy when maybe it wasn't quite the right loan for them.
Well, I'm sure you've seen that many times.
Many.
So you're a broker,
Yes.
and you operate the Mortgage Forum.
Correct.
Why would a person consult with a broker?
Well, one of the beauties of having a broker work for you is instead of going knocking on all the doors, and there's many financial institutions out there, you've got banks, you've got other financial institutions. A broker is able to deal with all that and make it simple for you, so you don't have to go knocking on all the doors.
Get the best deal.
Yeah, and it's not just the best deal, it's about personalising it. Many times people go to a barbecue, have a great chat with friends and come away thinking that's right for me. But when you actually sit down and have a look at it, it may not be right for you. So what we do is sit down, have a chat. What are your goals? What are you looking to do in the next 6 months, 12 months, 5 years? And then we work from there. We have over 1,350 products across the lenders.
Wow.
So that allows us to really not just find the right lender, but the right product. Because as you know, when you walk into the bank wants to ask you some simple questions, but it has to fit within their box.
Yeah, of course.
Yes.
So you can
That's
actually,
if there's someone there that you can talk to.
yeah, well, that's exactly right.
So you would actually tailor it for the people,
Absolutely.
for them,
Yes.
for their personal.
Yes, so we would sit down, we have a fact find we go through and ask the clients about do they want an offset account, how are they looking to pay off their mortgage sooner, do they want the security of a fixed rate depending on what their plans and journey is. Then we would sit down and present a number of options to them, and that may be across 3 or 4 different lenders that have tick the boxes for that client, and then the client chooses. They don't have to fit in with the banks or the lenders. They can choose what's right for them.
Because there's a lot of hidden fees, isn't there? Some of the lenders have out there, different hidden charges. Annual fees and
All fully disclosed.
things. No, I'm not talking about
Yeah.
the ones that but if they just rock up to the bank,
It's not always
They
about
don't really
the interest
know
rate.
what's-
Yeah.
Correct,
Yeah.
exactly right. It's not
Yeah.
always about the interest rate. No use having a cheap rate if you're paying through the
No.
back teeth.
Yeah, exactly. Through what?
fees.
Through what?
Through the-
So I've just been thinking about this for a minute, Debbie, and it's, I don't know if we're in competition with each other, or are we working together? Because you set up the mortgage, you encourage people to take on a mortgage and set it up and exercise it.
Yes.
And we're the ones that want to pay it off and get rid of it as soon as possible.
Well, I actually think we work well together then.
I'm just being facetious,
Yes,
yeah. But
yeah.
it does, you know, I guess, yes, you need to, very few people can pay cash outright for a house.
Correct.
And
Especially nowadays.
99,000 out of 100,000 times I would imagine that they have to borrow to purchase a property and they have to take out a mortgage. And it's probably one of the biggest financial decisions that they'll ever have to make.
Absolutely.
So how do you get someone through that process?
Well, we go out and we meet with them.
Which is great. I
Yes.
think that's very important.
Well, it's got to be personal.
Yeah.
Yeah. I guess where we work well together is if you want to pay off your loan sooner, you've got to get it right from the start. Because if you don't get it right from the
makes sense.
start and you're lender shopping and you're going from place to place, it can become very expensive. So
That's a good point. Very good point.
it's all about getting it right from the start.
So how long should they stay in a mortgage for?
That's a really good question. I encourage all my clients to review their mortgage every 12 months. So much can happen in a 12-month period, job changes, rate movements, new product launches. Banks are changing products all the time, and fees and charges. You see a lot of clients now have got a mortgage that they've had for 10 years. It's their good old faithful bank, but they're paying monthly fees, they're paying higher interest, and they don't even realise how much extra they're paying. So it could be costing them $1,000 a year, and all they have to do is switch even within their own bank because their product's now grandfathered. Yeah.
Yeah, right.
Grandfathered. I haven't heard that one before.
So do the banks look after their own clients? Would they ring up this person, for instance, and say, look, if you transfer to this other package that we've got in our own branch or whatever, you're going to save $1,000. Do they do that, or?
Good branches do, good staff do. Not
Okay.
everyone, though, in the world of internet banking ventures into their branch.
Sure. Okay. Look, we've got to go to a break, but
Yep.
we'll come back to you straight after.
Lovely, thank you.
You're watching the Mortgage Busters. We'll be back after this break. Do not go away. Welcome back. You're watching the Mortgage Busters, and we are with Debbie Kennedy from the Mortgage Forum. Deb, we were talking about people should health check their loans, their home loans, their financing every 12 months or so.
Absolutely.
Is
Or
that
any
much
major
very-
life event is always a good time
True.
to review your mortgage.
Absolutely.
Definitely.
So, tell me, with refinancing, is there usually a saving, or is it how does it always pan out? Like, is it worth doing just to take advantage of a cheaper interest rate? How do
No.
you determine when there's enough benefit to actually change the loan?
Okay, a lot of the things we would take into account is, do you have other debt such as credit card that you're not getting on top of? Potentially car finance. Sometimes we find ourselves caught up with quite a few debts to manage each month. So ideally we can consolidate all that. That could save a significant amount of money. If you've got a car loan, credit card, you may save $500 to $700 a month.
Oh, that's a lot.
On your mortgage.
That's a chunk of money, isn't it? That's almost a client could refinance, realise that they've got some savings and
Get a property. Get an
purchase
investment.
another property. Yeah.
Absolutely.
It's
You
all
put
As
that
long as
money
they
all to
qualify,
wealth
of course.
creation.
Yeah,
Absolutely. Yes.
Well, to tell you the truth, Deb, that's what we're doing. Most clients that seek help with us are getting their mortgages busted as soon as possible, but they're also building some wealth to get them through retirement. Because most people these days that where retirement is on the radar just don't have enough. They don't have enough.
Definitely, that's a big issue. And a lot of people now are looking into the self-managed super funds.
Yes.
And they
yes.
still just don't do anything about it if
Yeah,
nobody talks to
just
them.
get onto the Mortgage Buster show.
They
Deb,
just
what
don't
about
do anything about it if you don't
fees?
talk to them.
How do you charge the client a fee? How does this
Absolutely
work?
not, Greg. I would never charge a client a fee. We are actually paid by the lenders. So when we present the solution to the client, and it may be 3 or 4 lenders that they have to choose from, the client makes that choice. That lender is who pays a commission to the mortgage broker.
Oh, okay. All right, fair enough. So the client should never have to fork out $1 towards a broker.
I don't believe they should know.
Okay, fair enough. What's the biggest challenge that you find that most individuals or couples have when they're looking for finance? What's the biggest stumbling block?
A lot of people, employment in the current market, a lot of people are working casual and contract work. Sometimes they believe they wouldn't be entitled to a mortgage or they haven't been in their job long enough. But this is where the different policies really come in across all the lenders around employment. Overtime, how overtime is treated. You may walk into your own bank, you think you're earning really good money because you're working 60 hours a week, and all of a sudden the lender says, oh, we can't use all that overtime. And that's because you've walked into the wrong door. And that's
Okay.
where...
So it's critical then that really...
Absolutely. You find your dream home online, you want to buy your house, you think we're all set to go, I worked really hard, and all of a sudden you find out you're 20,000 short from buying that house. Now,
At the bank where you've been banking for 20 years or something like this.
absolutely, yes. So one of the things that we're able to do is sort through what policies you tick the box with, what income you're earning, where we can use that, and quite often the difference can be over $100,000 between the lenders
Wow.
That much
about
of a
what you can
variation.
borrow.
Jeez.
Yeah, it's quite
So
significant.
I can walk into one bank and get a loan of $300,000 and that's my limit. And then I can walk into the doors of another financial institution and get $400,000 just because they have different policies.
Yes. Policy is a huge stumbling block for many people. And how is the general public to know that?
No, they're not, because they don't do it every day. They do it once every now and then.
Exactly.
So who does the loans in the banks now? Because you used to work at the bank. Is it the bank manager still that does the loans, or do they have somebody else now?
That can vary. I know a lot of the lenders are now going to web-based appointments in
Wow.
branches, yeah, where you'll sit in a room and there'll be a screen and
You're
you're talking
kidding me.
to the lender who's sitting in the city.
Oh,
So
wow.
it's a lot different. I guess the other difference with a broker as well is it's not just getting that loan approved. We actually will then meet with the client to go through those loan documents, because all of a sudden you're excited, you've got your loan, and then you're presented with a whole heap of paperwork.
Oh, yeah.
And
Going,
nobody gets that.
Where do
Nobody
I
gets
start?
it. Yeah.
I know of a couple that we
Yeah.
encourage them to get an offset account.
Yes.
They're going great guns. They understood the concept. They wanted to get the offset going. They wanted to use the credit card.
It came in the mail.
to get the 55 days interest free and all the rest of it. Technically, they understood it. It was going to work. They got all this mail in the letterbox, and it was just that they couldn't
Mind-blowing.
make it. It was mind blowing.
Yes.
So tell me, how do you manage someone through all that?
Well, on all occasions, I try to get the documents sent to me.
Oh,
I then go
that's
out.
big.
Yeah,
that
yeah.
is fantastic.
Yep.
Yes.
Go out, meet with the client, then go through the loan documents, explaining once again and confirming what we've already discussed. Because, you know, there's a few weeks between getting your loan approval and getting the paperwork. There's a bit of excitement there, so sometimes you do
I don't know
lose
of any other
sight.
broker that does that. Do you?
No.
No, that's a point of difference there for you, because really it can be a nightmare.
Well, the other service we provide is for those that are constructing. We actually assist them with their whole progress payments when the bank's asking for you the next stage to the builder. That can be a bit confusing as well, so we manage that for the client as well.
So you actually do it between them and the builder and
Yes.
the bank?
Absolutely,
Okay,
yeah.
that's great. That saves
Any way we can help the client,
a lot of
we
problems.
hold their hand through the process. whether it
You'll
be
have
investment-
clients for life in that respect.
Well, that's what our focus is at the Mortgage Forum, is about creating relationship, because it is about relationship. As you mentioned, you can be with a bank for 20 years, but not always are you dealing with the same person. Whereas at the Mortgage Forum, we really want to have a relationship for life with that client and go through those stages when they have their first children, when the children get married and they need to maybe look at some finance to help with
of
that
course.
wedding.
Absolutely. All right, we've got a minute or so left. Debbie, would you like to summarise the points?
I think why use a broker? It's
Yeah.
a one-stop shop.
One-stop shop, absolutely.
It doesn't cost you to use a broker. It can be in the comfort of your own home. You can meet the broker at their office, in your own home. It
They're
can
all
be a
great
relationship.
benefits.
Yeah,
Fantastic.
and it can be a relationship for life.
Yeah. And what I really am
keep it simple.
very impressed by is the fact that you get all that mail sent to yourself and then you go and sort it out with your client. I think that's fantastic.
And myth bust.
And myth bust, absolutely. Yeah, well, we're all trying to be myth busters. We're all trying to be busters of one type or another. Deb, anyone that's watching, if you'd like to get in touch with Debbie Kennedy or the Mortgage Forum, just check our website, which is
www.tmbshow.com.au.
The w's.tmbshow.com.au. Go there. We'll have a link to Debbie and her fantastic service. Deb, thanks very much for coming on our show, and surely we'll have
pleasure.
you on again.
Thanks for
Thanks
having
very
me.
much. Stay with us. We're going to a break, but come back. We'll have more on the Mortgage Busters show. Welcome back, viewers. You're with the Mortgage Busters show. Adrian,
Howdy.
howdy. Finally, we get a minute
Yes.
alone.
It's always nuts.
Wasn't Debbie fantastic?
Yes, fabulous.
Debbie
Customer
from
service.
the Mortgage Forum, and it's all about
Customer service.
customer service. Fantastic. Look, I know it can be a nightmare when you take out a loan, for a mortgage or a mortgage loan, and you get, it's all approved and everything, and then the mail starts, and you get all these envelopes with cards and statements and instructions and blah 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 blah. I've had people with baskets of stuff come and say, "Help!
What do I do?"
What do I do?" But her point of difference is she does it all. She
great.
sifts through it all, and then she'll open that mail, she'll attend to it, and then go to the client and sort it all out with them.
Well, make everyone's life easier.
Exactly. Now, that we see many people in the evening, most usually, and many people come to us, get our support and our help in paying down their mortgage as quickly as possible so that they can own their own home, totally outright. Have the title in their hands, as we mentioned just about every week. Now, alongside doing that, a problem that's become really very, very apparent in the average home is that most people are underprepared for retirement.
That's right.
It's a fact. Many, many people that are heading into retirement in the next 5, 10, 15, 20 years just don't have enough super. So what I wanted to do was just quickly go over, what do you need, what does the average person need to retire into a comfortable life? Let's go to the whiteboard. I'm going to go to the whiteboard, Adrian, and I'm going to say this. The average, what would you say is a nice, comfortable income to have in retirement?
Everyone wants at least 50,000.
50,000.
A
When
year.
the last time I looked, the Association of Super Funds of Australia says that the average couple needs around about 56,000 per annum to retire into a comfortable life.
Over
okay?
what? Over what time though? What are we talking about?
Oh, as
10
if
years?
it was happening tomorrow. No,
10 years?
every year. Every year,
For
56,000
10 years or 15 years, what should they allow for?
How do you mean? I'm not sure
When
what
they
you're saying.
retire. When they
Oh,
retire.
indefinitely.
Oh, okay.
Yeah, $56,000 every year for as long as you live. And in that, they also supply a budget, a bit of a profile of what that looks like, and it included 2 glasses of wine a week. But, I mean, that all varies. I'm not too interested in that.
Yeah.
So let's just make a nice round number of 50,000. Let's just say 50,000 would be a very powerful income to have in retirement. Every year, you're getting $50,000 to live the life that you want to live, or that you live the life that you can live. Because not many people will have this in retirement. I can tell you that now. My guess is we're going to have in Australia a bit of a, not a bit, but a poverty in retirement problem or syndrome. So you need to prepare for this now. Now, where is this going to come from? From the average couple's superannuation fund, it's going to be 2 or 3 years, because the average couple's got about 200 combined, a couple of 100,000 in super maybe. The average middle-aged 50-year-old, right? Or 50 to 60-year-old has got around about 200,000 in super. It's going to last 4 years. So where does this come from? It's going to come from a $1 million retirement fund.
And
Retirement
how do they get that?
fund. Now, the big question is, how do you get that? But before we go there, I want to say, why did I say $1 million? It's based on a 5% return. 5% is the industry standard. So, if there was $1 million sitting on this desk right here and now, and we took this $1 million and put it into a bank account, into a term deposit of some sort, or a high interest account, we're going to get 5%. We're not going to have to look too hard to find 5%. So 5% Well, 10% of $1 million is 100,000. 5% is
50,000.
50,000. That's where our $50,000 income is going to come from. $1 million retirement fund based on a 5% return gives you $50,000 every year, indefinitely. If you've got $1 million in the bank, $1 million in the bank, then as long as you don't touch it, you'll be getting $50,000 every year. That's assuming no inflation and all that sort of stuff, right? So where's this going to come from? That's where we can help. And not only help in getting this ready, but also help in paying down the mortgage that you currently have on your own home that's not giving you any benefits. And when I say benefits, what do I mean, Adrian?
No income.
Starts with T.
Tax deductions.
Tax deductions, of course. We don't get any tax deductions on anything that, unless we use our home for a part of a business or something. So the job is to make this $1 million happen. We've got to make that happen. And that could be an amalgam of stuff. It could be some super money, plus some money that you've got in shares, plus a couple of investment properties. You know, it's not that hard to achieve, especially if there's time left. You run out of time, you can't make this happen.
Plan.
Plan. Now, when you think about it, it's not hard to find a home that costs $1 million.
No.
So all you need is, besides where you're living, is a home to the value of around $1 million. That will give you a 5% return. But we don't look at it that way. We look at it as a mixed bag of things. So investment property, maybe some shares, maybe some money in the bank, maybe super, all the rest of it. This is our target. And this is where we're also helping people in their homes.
A big chunk would be property, I'd say.
Oh, a big chunk of that would be investment property.
Biggest returns on your money.
Biggest returns.
And you can leverage.
It's got
everything going for it.
It's got everything. Yeah, that's a topic for another show.
Okay.
But what I wanted to highlight there was the fact that you can do this. The average mum and dad can do this. With the right knowledge, you can build that retirement fund as long as you've got a little bit of time up your sleeves. What I'm talking about is 10 years plus. You got 10 years plus in the workforce, remaining in the workforce. You're still paying tax. You got income coming in with the right knowledge, the right people, the right knowledge around you. You can make that $1 million retirement fund happen.
A lot of people have started already. They've bought a house. That's a start.
Absolutely.
They started without even knowing. They've started.
That's the biggest.
They got equity all of a sudden.
I see what you're saying. Yeah, exactly. The fact that you're living in a home that is yours has equity, and you know it all starts there. Good point, Adrian. Well, on behalf of Adrian and myself, say goodbye to the people, Adrian.
All the best viewers.
All the best viewers. Thanks for being with us. Hope to see you the same time again next week. From the Mortgage Busters show, on behalf of Adrian and myself, Greg, we'll see you next week at the same time.